everybody. Today, I have my good friend and fellow Chicagoan, Grant Hensel, on this lovely, December afternoon for me. Grant, where are you at today? Let's give people the real question that they want answers to.
I'm in Florida, normally in Chicago, but in Florida on a trip, and it is beautiful and sunny and not snowing, which is wonderful.
Oh, damn it. I am jealous already. So, Grant, today I wanted to talk to you a little bit about some of your work in agencies, as well as work with acquisitions and raising money in a fund. A lot of cool stuff that you've been doing that I love following along with. And every few months when we get lunch, I'm like, man, this guy is doing some fun stuff. So Grant, start us off with your background and the business Nonprofit Megaphone that you still own and was kind of your entrepreneurial. Well, it's probably not your starting point, but your first big hit in the entrepreneurial world.
I've wanted to be an entrepreneur since I was 12. I've started businesses 10 times. 7 of them did not go anywhere, just totally failed. 2 of them got acquired in relatively small transactions. And then Nonprofit Megaphone has actually done well, which has been great. And we are a very specialized marketing agency. We just work with nonprofits, and we help them with a program called the Google Ad Grant, where Google gives nonprofits $10,000 a month, every month forever, to spend on ads in Google search, which is a lot of fun. And now have a team of about a little over 60 folks. And yeah, great leadership team and great CEO now who's not named Grant, which is wonderful because she's so much better at it than I was. It's hilarious. And now my wife and I bought a business that is also a marketing agency. I searched, we acquired, and she now runs that. And now we also have a fund called Entrepreneurial Capital that invests in other people buying and running small, small, profitable, enduring businesses, which has been a lot of fun.
Awesome. So we'll talk about the acquisition and fund side of things in a minute. Let's start with marketing agencies. You know them fairly well. At least you have a couple data points of seeing things that work. What do most people who own marketing agencies that you talk to fail to realize about this business, or what are some of the things that they're likely getting wrong or not thinking about that you've realized make a big difference?
Everyone's different. The things that were very helpful for us were choosing a niche and really honing in on it and trying to find something where you can legitimately say we are the best in the world at X. And Nonprofit Megaphone can say we are the best in the world at Google Grant Management. We manage more Google ad grants than any other company in the world for more nonprofit organizations, which is wonderful. So that's been enormously helpful. We are huge fans of EOS, the entrepreneurial operating system. There's a book called Traction. There's another book called Get a Grip that basically explains everything in Traction, but as a story, which I love. There are other business operating systems as well that I'm sure are also great. I just don't have experience with them. But for us, that was the big turning point in unlocking significant improvements in performance, significant improvements in letting me work on the business instead of in the business. So that's been transformational. And then I would just say broadly, you need a foundation of specialization and some kind of good operating model like EOS, but having the founder get out of primarily being the salesperson and primarily being the delivery person, and instead building an organism that is the business that can do those things. And, the leadership team is improving that machine instead of physically running it.
How big was Nonprofit Megaphone before you could get out of that sales seat and really into a true leadership seat? And I'm sure there's a bit of a spectrum, but like, what did it look like?
We had a weird founding situation where I started doing the business at night and on the weekends while working a normal job. And so that almost forced us to hire people. Like, I never did the sales, interestingly.
Wow.
Even from the beginning, we hired someone. I did the marketing, and then someone else did the sales ever since the very beginning, which basically forced us to build like a good sales process way earlier than normal, which is funny.
Yeah. I think conventional wisdom would say not to do that. That's incredible. Like, it
wasn't. Yeah. We were fortunate to hire people that were better at sales than I would have been.
Yeah.
And so that was wonderful. But yeah, it was weird. We just had no other option. Like, I couldn't take calls during the day. It was before the idea of like remote work and, being able to like sort of have flexibility in that regard. And so
that's cool. I think there's something to this, like, you start a business and it has the constraints that you have. like accept that. I think too many people, like I talk to a lot of entrepreneurs that like have these ideas for businesses that sound great, but like they're the wrong person to do them. They have constraints that will not allow them to do it. You know, for example, somebody's like, wouldn't it be cool if there's an AI startup that does this, this, and this? And it's like, well, you have no access to capital, and that market is full of capital that is going to run you. You have no technical experience to actually execute or build the thing yourself. So like you're gonna have to hire that. Like there's just too many headwinds, right? And so I can appreciate about your story and experience, like that whole take a headwind and just say, okay, that's a constraint. Let's build a business around it. Was that almost the way it ended up kind of working? Or is it, I mean, a little of this plus you saw the market opportunity? Like how'd that happen?
Yeah, so it was exactly what you described, where most of my 7 previous failures came from trying to do something that I was fundamentally not a good person to do. Like it would have required a lot of venture capital, and I didn't want to raise venture capital. And so then, I would spend a year working and just get annihilated by someone else who had. So that, I think, is very insightful what you just said. The sort of founding insight was that there's this thing called the Google Ad Grant. It's a great resource. At the time, this was 9 years ago, many nonprofits had not heard of it. Anecdotally, it seems like they just like weren't aware of it. And as a experiment, we got the email addresses just by like grabbing it from people's websites and other places of hundreds of nonprofits, and we sent them all an email with a 1-question or a 2-question Google form survey. And the questions were, 1, have you heard of the Google Ad Grant? And 75% of people said either no or I've heard of it, but I'm not using it. And then the second question was, if you could reach people who were Googling things related to what you do, would that be helpful? And everyone said yes, would be very helpful. So we said, okay, we have identified a market need.
Yeah.
And we liked that it could be a recurring service that we could deliver, which was our other thing of like, I will not do non-recurring work.
Yeah. Man, that's a really good, it's such a simple origin story. And I love that, like the simplest questions. I don't know that would work today. I mean, do you ever think about this? Like it wouldn't work today, right? Then not in that same iteration. Yeah.
Nope. Yeah.
Yeah. It's so funny how these things, like people, whenever they ask you about like your founding story or how should I start a business does this, I'm always like, I don't freaking know. I knew how to start one business once. Like, and I got lucky. So I can't generalize that. Yeah. Yeah. So you were in charge of marketing. Talk to me about that. I mean, like, was it at the beginning shooting fish in a barrel because so many nonprofits did not know of this program? And it's like, honestly, Google has limited incentive to promote it, given that it means they give away free money. I mean, what was going on there?
Yeah, it was much easier to get people interested in on calls to discuss it because they're like, oh, this is fascinating. I've never even heard of this. And it's much harder now. That being said, we counteracted that ease of marketing with being not good at sales. We had no idea what we were doing. We had no case studies. Our pricing was so low as to be decredentializing. And that's just like funny because
yeah.
We figured like we got to, put it where people can get it. We eventually started doing free trials to get over the hump of sort of proving ourselves. And then that actually worked well for the first couple of years. And then once we were a couple of years in, we realized, okay, now we have enough case studies. We actually know what we're doing. We can sell this without a trial. But yeah, it was funny. I think we went for like 0 for 100, in our first 100 sales calls.
Well, it's kind of like, I mean, if your close rate is 0.01%, you just need a massive pipeline to make a business. If your close rate is 50%, you don't need much pipeline to make a business. And yeah, you should know where you stand in that spectrum. Yeah. Super interesting. One thing we've talked about a little bit in the past that I'm always curious about with these super, super niche down businesses like this is, at some point, do you hit the edge of that market where you're like, well, we've kind of sold to all the nonprofits that this makes sense to sell to, given that they have to be a certain size and have some money to spend on it or some, so there has to be something there. And what do you do when you kind of, have you hit that point? Maybe first question, and then what do you do when you hit that point strategically? Do you start offering other services? What was your move?
It's interesting. Our view is that there are probably 10 to 20,000 nonprofits that would be great clients for us, and we serve almost 800 of those. And so that is, depending on how you count, maybe like 8% to 4% on the low end. And we're the biggest in the world. And so of this really very niche service. So you could look at that and say, wow, so much more room to run. This is fantastic. The thing that tends to be the constraint in the reality that we've found is customer lifetime. We have a very strong customer lifetime. It's like 7 or 8 years on average, which is wonderful, until you're 9 years old as an organization. And then, your 7 or 8 year lifetime leads to meaningful client churn
Yeah.
because people are hitting their 8 year mark, which is your average. And so that has forced us to now start adding additional services, which has been wonderful and great. And that's great. And we're just gonna have to keep doing that and finding we don't want to provide sort of like generic services that it's just like yes, and we also can like do X. We want to feel like we have a good approach that gives a nonprofit some edge and that like we can really stand behind the service and do it well. So that's been like a very methodical expansion, but we're just gonna have to do more of that.
Yeah. Yeah. I find that the thing that's really hard to me as I've stepped away from both of our businesses quite a bit in the last couple of years is keeping tabs on where the market opportunities are is really tough if you're not in customer calls regularly or in those team meetings. I'm curious, like with the CEO you brought in or hired or promoted, have they been able to do that? Is that something you still kind of keep an ear to the ground on just in case? Like, what's it look like right now?
I keep a little bit of an ear to the ground just because that's the stuff that I find, really interesting and an area that I can be helpful. Our CEO is also great at that, and frankly, so is the leadership team. So it's absolutely a team effort. But yes, I do think there's some stuff. There's some stuff that we're testing that is sadly too soon to talk about, but we'll see if it works. That I do think could be very helpful in sort of
Yeah.
unlocking, because now we have almost 800 clients. We just need to offer them new, really good services, and that should be the next wave of growth. It just needs to be really good. So there's a couple things that we're testing. We'll see how they work.
Yeah. My experience has been that, the people on the team that are really good at executing and optimizing our existing offerings have a really hard time breaking out of that and offering something brand new. I don't know if you've run into that same thing, but like, again, it's just a different mindset. Like I have no problem saying, yeah, we could do that to somebody and then figuring it out on the fly. Like to me, that's entrepreneurship 101. And again, when you start a business, that's what you're always doing. But when you hire a team, they start to they come in and they're like, I'm really good at this piece in your process and I can do that piece. And then you give them this like new thing that like totally different out of their scope and knowledge. They go, whoa, man, this isn't what, I don't know what I'm doing here. And that's been, again, this is my personal experience. Curious to hear if you've seen that and also what you do about that. I mean, because I'm still learning, like, I don't know how to approach that, or if I've just got the wrong people or what.
Yeah, I've been super impressed. I feel like all of our leadership team members are more operationally oriented than I am, for sure, which is a compliment to them and frankly an insult to me and
Yeah.
and deserve. I do think, yes, do I have an easier time imagining wildly different things and sort of setting aggressive goals for them? And is that sometimes annoying if you're on the leadership team? Like, yes,
Right.
for sure. That being said, the leadership team, which has now sort of been in their roles for like at least a couple of years, and in some cases quite a while, they have really grown in that a lot, and they are very good at taking things and making them better. We have a person who has been like sort of special projects and like innovation oriented. She actually also does a bunch of our finance stuff, but then spearheads like a new service launching and has done that very successfully, which is a strange combination of skills. Your typical finance person is not good at that type of thing. And I think we've just been fortunate to have very versatile people who just sort of figure it out. And I don't know, they have a remarkable ability to be like, we're going to need new services. I think I'm just going to reconstitute my molecular makeup such that I can also help us have new services. And it's great. I don't know how they do it.
I mean, that's awesome, right? Like, I think this is one thing that I've been, again, personally been asking myself, is it that these people are good at what they're good at, but I'm asking them to do something they're not, and it's going to take time for them to grow into that, or maybe they never will. Or is it just a fundamental like entrepreneurial skill that normal people just don't have? I don't know. And I think the answer is probably it depends, as the answer to most good questions is. Grant, this kind of leads into the next part of this conversation, but what's your superpower as an entrepreneur? What are you really good at? And I have some guesses, but I want you to talk about yourself because you know yourself, I think, better than I will. You've grown a fairly big company. You have then raised money in a fund. You've done some weird stuff, like not a traditional arc. What are you really good at?
I wish I could nail this down more effectively. Such an interesting question. I
I'm getting you to that 5%, man. That
Yeah,
EO
no, I
5% here.
I appreciate it. Yeah. Well, the leadership team has given me a bunch of feedback from being self-deprecating. They're like, stop being, because I like my flippant answer would be like, I don't know, like I apparently nothing. But they're like, no, I think that it's possible. I think possible things are, it could be. I think I am actually good at this of finding really good people and not getting in their way. I think I'm good at that. And I think like that explains all of the success of Nonprofit Megaphone is we've found great people and we have successfully not gotten in their way, and they've made the awesome things in each of their areas of responsibility.
I recognize that for sure, especially as your team has grown to be running the company on their own. I could definitely see that. I think you also have a level of like focus and discipline that is kind of rare in entrepreneurs that want to pursue a lot of things. I know like I'm acting like you have all these things going on, but really like you've been very thoughtful in your approach to them, I feel like.
I love there's a book by a guy who I think was like the chief of staff to Jeff Bezos for a time called Thinking Backwards or Working Backwards, something like that. And they had Amazon has this concept of like a single threaded leader. And so it's a leader who's basically responsible for one thing in a really focused way and not really anything else. And I love that. Like, yeah, you know, we have a bunch of single threaded leaders in Nonprofit Megaphone. We have a CEO who's the single threaded leader of Nonprofit Megaphone. Entrepreneurial Capital is doing various things, but like those things have leaders who are focused on them. For me, that's been enormously helpful, and because I have to follow that too. Like I kind of have to be focused on one thing, and I would say my one thing I'm focused on is helping people who are CEOs of businesses be more effective, whether that is the CEO of Nonprofit Megaphone, the CEO of the people we invest in, or now my wife, Julia, where we bought a business and she's the CEO of that. So I do
Right.
still feel focused, even though there's multiple
Yeah.
things now.
Yeah. I do feel like they're all kind of, even though you got multiple threads going, you're right. There's this like unifying thread between them that kind of makes sense why you're involved. So let's talk about that transition from, running Nonprofit Megaphone as your primary thing to now having this fund and coaching CEOs and helping get them, what they need to move their businesses to the next level. How did that start to evolve as an idea for you?
We first bought a business that my wife runs. That came out of she worked for Boston Consulting Group, which is a wonderful job, but it is all of the hours of the day and night. And, she wanted to have more flexibility and more creative ownership to sort of build something that she could call her own and actually have it be her own. And so I searched. I did this thing called searching, where you just go out into the world and you try and find a business to buy and see if someone is willing to sell you their business, and you negotiate with them and you agree on a purchase price and you do due diligence and then you buy it. And then normally you run it. In this case, Julia was going to run it, and that was always the plan. And that was a wonderful experience. As mentioned, I have a, call it 1 for 10 success rate on businesses that we started. And I started to realize that there's probably a much higher success rate if you buy existing businesses.
Yeah,
And
is that
so,
why you didn't tell Julia just go start your own thing? Because it's like, look, you're going to go through 10 of those if you go that way.
partially, she also did not want to.
Yeah.
She has
Okay.
always said, like, I'm not an entrepreneur. And I was like, I
Mm.
disagree with that. I think you'd be a great business owner. And she would always say, yes, but I would not be a great business starter.
Yeah.
And that's probably true. Maybe.
Yeah.
I still disagree with her, to be honest, on that. But
Sure.
like, whatever. She is a great business owner. And so this was an interesting path, which I did an MBA at Booth just because I'm a nerd, and they have a lot of content around entrepreneurship through acquisition, which is what this is, buying and running businesses. And so that was sort of an interesting path.
Remind me of the timeline. Did you start the MBA before you started searching, or was it around the same time? Like, what was that like?
So Julia went first, and then I did the world's slowest MBA. It took me 4 years because I was doing it in the
Yeah.
evening program. And then I think I had just finished. Well, I was finishing up at the time that I started searching,
Okay.
something like that.
Okay, cool. So for people who are not familiar with the process of buying a business and some of these things we're throwing around, searching and all this stuff, like it sounds all official. There's a little bit of MBA speak in there, I know. So let's back up. There's a concept in business school that goes around called a search fund. Maybe introduce that concept first, Grant, and then we'll talk about some of the mechanics of buying someone else's business. So what's a search fund?
So a couple decades ago, the concept of a search fund was born, where typically a recent MBA grad, someone just graduating from one of the top business schools, would raise a search fund, a fund for their search that would be, a couple $100,000 and would pay their living expenses to conduct a full-time search for a business to buy over the 2 years post their MBA. They would then buy that business and they would be the CEO and run it and have some equity in it. Typically, it would be like 8% of the equity at close, 8% over time, and then 8% if they hit performance hurdles. They would have a board. The board could fire them. They're basically like a CEO with equity. And that model actually worked very well. People did, especially investors, did quite well. Searchers did well on average, which is great. That model then evolved a little bit. And that's now called a traditional search fund. So you raise a search fund and you search. There's now another concept, which is actually now more common, called a self-funded search, where you just search without raising a search fund. And you still use capital from other sources. You're typically getting a loan from a bank under the SBA program, which gives you up to $5 billion of debt capital, which you have to personally guarantee, which is intense, but can be great if it works out. And then sometimes equity capital from other people, or sometimes just from yourself as the searcher. And you do the same thing. You find a business, you buy it, and you run it. You just aren't being paid by someone else during the search period. But the upside is that you end up owning a majority of the equity. No one can fire you other than for like committing fraud and stuff like that. But you are truly a business owner. You are truly in charge, and you truly run the show.
Yeah. And you all's search was self-funded, right? The one that Julia did. Yeah. So yeah, it's so funny how MBAs and business schools come up with terms for things that are, just like, of course, people have been buying businesses for a long time.
Yeah.
Yeah. Self-funded search is like just another code word for I'm buying a small business with debt and my own money. Like, yeah, okay.
Right.
Anyway, no, but I do think labels are kind of helpful. I joke about it, but I also do think there's some reasons that labels are helpful, because especially if you're going to raise money, it's helpful for investors to understand the category that this falls into for them. So it took a few years of this being tried multiple ways, multiple schools, but eventually it became a category of investments. And the reason I'm bringing this up is this is kind of where your fund comes in, right? Is you saw Julia buy a small business, you heard other stories in business school, presumably, and then decided to start raising money to go invest in some of these little searches. So talk to me more about like, how did that come about, and what are you guys looking for at this point?
So after we bought that business, I wanted to do more of this. And the question was, do we want to buy more businesses and own them ourselves, or do we want to invest in other people's deals? Ultimately, our view is that the most talented people, like the best and the brightest, would want to bet on themselves and would want to be the majority owners themselves versus just like being hired for something that we bought. And so decided to invest in other people's self-funded search transactions. And we made 11 investments. And I was sharing these with mentors and so forth, and they ended up saying, these are great. Like, these are really good deals. You should start a fund. I had no idea how one does that.
Right.
And they're like, you'll be fine. Like, you'll figure it out.
Right,
You're an entrepreneur. And ended up being less complicated than you'd think. We hired a law firm that specializes in fund formation, had lots of conversations with.
How much does that cost roughly? Like,
for us, it was like $30,000.
Okay. So not crazy.
So
I mean,
it's not insane. Yeah. And they were great. They did, did everything really, really good to work with. They connected us to like, here are some options for your insurance. Here's some options for your fund admin, which is just like accounting, but they call it fund admin. Here's some options for your onboarding software and so forth.
Because there's some filing you have to do too, right? Like there's certain regulations around this.
Correct. So there's regulations based on. We were what's called a Reg D 506C fund, which means we're allowed to publicly talk about it. And here we are.
Yeah, here we are.
including publicly raising money, which we're no longer doing, but I was able to like talk about it on podcasts and stuff. And the requirement for that is you can only accept money from accredited investors, and you have to validate their status from some third party. So you have to get like their CPA or someone to say it to you, this person is in fact an accredited investor, which was fine.
And for listeners, accredited investors, they have to have a certain amount of net worth. You probably know, you could speak to
You have to have
the
$1 million
specifics.
of net worth outside of your primary residence, or a personal income of at least $200,000 for the last 2 years, or $300,000 with your spouse. Or you can be like I think if you hold like a Series 7 or like specific investment profession.
Certain designations. Yeah.
Certifications,
Cool.
you also count.
Okay. So you go about the process of, you're making some of these deals on your own, and then eventually somebody's like, hey, you should just raise a fund and deploy other people's money as well. And you start doing that. It kind of going back, just rewinding a tiny bit, because I don't know if I've asked you this directly. Why not work on acquisitions for the purpose of like expanding Nonprofit Megaphone or Julia's business? Like, why not just find little add-ons and continue rolling that together versus this? Was it just purely an interest thing, or did you see some major financial difference or advantage to it?
So the funny thing is that what you are describing is the better short-term financial path.
Well,
for sure.
It depends, right?
depending
Yeah.
on how it goes. We can talk about fund economics, but like we there's basically a management fee and carry, and we lose money on the management fee because we have a team. So it's has a high ratio of sounding really cool to not being a good short-term financial approach for yourself. I think like our investors are going to do great, and that's anyway. And I'm the biggest of our investors, so like everyone wins. But that was also consideration. And it's something that we're still like, Julia is working on. She's done one additional acquisition into her business, Lexigate, and is working on others. And so that is definitely the plan. Nonprofit Megaphone is also open to it. And basically, the reason that we decided to pursue this is I do think I can be helpful to Nonprofit Megaphone and Lexigate in that capacity. And this seemed like a good way to actually focus my efforts and my own learning and professional development and network development in a way that would ultimately be most helpful for Nonprofit Megaphone and for Julia, and just like for our own personal investment and for all of our investors. Because the NPM leadership team does not need my operational support. But what they would potentially benefit from is sort of bigger strategic guidance, potentially including M&A. And this puts us into the mix of, situations where that can happen. We now have wonderful relationships with investors. We're our, CEO of Nonprofit Megaphone to really want to acquire a complementary business. I could be very helpful in that.
Yeah.
In a way that I couldn't have previously.
Yeah, that's a good point. You're building up reps as a acquirer, but in this smaller capacity, which means that you're, able to take on more of them because you're not directly buying every one of these businesses. You're just an investor evaluating these deals as they come through. So you're getting to see lots of things and learn from it, but not have to actually 100% commit to just one or two transactions, which is all you can afford if you're just buying, things to add on. Yeah, that's interesting. I would think also the diversification is interesting and potentially useful. I mean, look, you and I are young enough in our careers where we can sort of keep doubling down on black if we want. Nothing like we got time to recover, hopefully. But I could also see the case that like, hey, look, it's nice to spread it around a little bit and maybe not have 100% of my net worth in one business. I was talking to another guy here in Chicago that we both know, a small business owner, and his business is bigger than both of ours, but he was, saying how it's 99% of his net worth. Like he's saved for retirement, but like that has paled in comparison to the growth he's had in his business. And it's kind of a problem now that he's hitting his 50s or whatever. And it's like, yeah, you at some point you want to spread the chips around, I suppose.
Totally. Yeah. And it's nice to learn from other industries. Like there's been great cross-pollination of stuff that I've learned in other industries that's helpful for Nonprofit Megaphone and vice versa. It's been great.
Yeah, I find that interesting and attractive as well. I've only ever looked at acquiring agencies and only, done that. So all these there's an advantage to that where I get to see a lot of the similar kinds of companies' books. But the disadvantage is I think it is kind of cool to look at other deals. So what kinds of things have you guys invested in or looked at investing in? Just give me some sense of the range of types of businesses.
All kinds of things. So we invested in a transaction that closed last week that does tombstone engraving, like funeral monuments, which is wonderful. And it's a wonderful business. Some of the investments, some of these I made personally, but we invested in a business that does chicken coop fan motor distribution. So
There
if
you
you're
go.
a scaled chicken coop operator, you need motors for the fans that keep the chickens cool. This business supplies those to you. It is a fantastic business, and we love it. Yeah, so all kinds of stuff like that would be more like industrial distribution. We've done light manufacturing. We invested in a business that does specialized procurement consulting for schools in California. We did a business that distributes supplies for fire departments, also in California. Kitchen remodeling business, a armed security business, like all kinds of very interesting companies. With the through line is we want things that have a high degree of resistance to like the forces of AI, although I do think those are often overblown, and then are hopefully recession resistant and sort of enduring non-cyclical demand, and that can be grown in a fairly capital efficient manner. So you're not constantly buying new forklifts or whatever it would be if you want to expand.
Yeah, super interesting. The the what are the types of people that want to buy these businesses? And I kind of ask at it from the lens of like a lot of people come, talk to us. I'm sure you get similar kinds of conversations. They're like, yeah, I want to be an entrepreneur, but I have no idea what kind of business to start, right? And like, how would you ever discover the niche of industrial chicken coop fans unless you like were a guy cleaning chicken coops for 30 years or whatever, or, like you have to have some industry experience or something. And I think buying a business is a really interesting way to just sort of like acquire that industry experience and find those niches. But like, who goes after those kind of companies and how do they find them?
Yeah, all kinds of people go after, and then there's a whittling process where many, do not succeed. But
Yeah.
the typical person that we end up investing in who actually buys a business, for example, tends to be a little bit more mature in their career than the classic traditional search fund, just graduated from MBA type person. So tends to have a little bit more work and life experience. In a perfect world, has some kind of operational experience in a similar industry or has built transferable skills where like they were a really good B2B salesperson and they're buying a business that is really driven by B2B sales, even if it's in a different industry. They're often finding these businesses through potentially personal relationships, potentially cold outreach, but potentially brokers. People want to sell their business. They list them with a broker. It's kind of the equivalent of a real estate agent. There are websites where brokers share businesses they have for sale. And then searchers or just people who want to buy businesses reach out, they sign NDAs, they look at decks that the broker has prepared, and they engage in negotiations with the seller.
Yeah. What are some of the things those buyers are not aware of, when they first step in and become business owners that you either help them see or everybody sees once they get in there? What are some of the things that they're commonly missing or not aware of?
The things we really push people on are working capital. It's deep importance, the importance of cash at close. We see all kinds of Excel models where people say, yep, I'm going to buy the business. I'm raising exactly enough money to buy the business. And then they're going to leave some working capital in there.
On day one.
And there's zero in the bank on day one. And I have a line of credit and I'm going to draw on the line of credit. And it's like, that is not a good idea. That is not a recipe for success. A line of credit should be an emergency resource only. You should have a bunch of money in the bank on day one because there are a ton of problems that happen in small business and all of them cost money. That is the one unifying factor.
You and I know how it goes, right? Where like day one, you buy the business and everything looks good. And then you realize your biggest client pays in 180 days for some reason. And that was never disclosed or discussed. And like all of a sudden you have this huge working capital issue where, another $50,000 would have saved your life versus now you're tapping into a line of credit, paying interest on it for 6 months. Like, it can be brutal. So that's a good point.
Yeah, 100%.
Anything else that stands out as far as like things they don't know or see?
We highly recommend EOS to everyone, and many people take us up on that, which is great. And then they tend to have better results from doing that. People tend to underestimate certain risk factors. Like if someone's buying a business where there's a number of family members, that's just a big risk. And it always is. And you just have to adjust for that, like in purchase price and terms. or not pursuing the transaction at all. I think people underestimate the impact of customer concentration. If you have one big customer, you just have to assume you're going to lose that big customer. And then you have to do all your analysis as you think about buying the business, assuming that that big customer leaves. I just see it over and over again. Like that, it weirdly happens a lot.
Mm-hmm. Yeah.
And yeah, it's same thing for capital expenditures. A lot of people will calculate purchase price as an EBITDA multiple, so earnings before interest, taxes, depreciation, and amortization. And that makes a lot of sense as long as you don't have any depreciation or amortization. But if you do, those are often real expenses. Like if we were looking at a trucking business, and it's like EBITDA is fake. That doesn't make any sense because they're on a 5-year truck replacement cycle in that case, and so you have to include that. So lots of things, and lots of things there's just like, oh yeah, you wouldn't realize that unless you'd been punched in the face by it beforehand. And so we've been punched in the face a few times, and hopefully we can help the people we invest in dodge some of those punches.
Yeah, I think those are all really good ones. And I think even seasoned business owners could miss some of those because like you said, like if you have industry experience in one place, it may not open your eyes to all the nuance of another industry. And yeah, I've personally only dealt with these asset light businesses where we don't have real depreciation and real assets like that are on the books. And so repair costs and maintenance costs and things like that, like, not something I know how to factor in. I'd have to, there'd be a big learning curve there, I imagine. One of the things you mentioned on LinkedIn related to this is about adjusted EBITDA and how funny that metric can be. I've seen the same things. I'm sure we both look at, the Sims from brokers that have this very rosy, quote unquote, adjusted EBITDA number. Tell us what adjusted EBITDA is supposed to mean in theory and what it looks like in practice.
So adjusted EBITDA makes sense in a context where there is no depreciation and amortization. So EBITDA is the same as pre-tax profit, and that's fine. That's a legitimate metric.
Yeah.
And then
we want to use pre-tax profit to say how much a business is worth. Good. That makes sense.
Totally makes sense. Yeah. And everyone's tax situation is different, so you can't deduct the taxes. That makes absolute sense. And then adjusted, there are some legitimate adjustments that can happen. For example, does the business employ the owner's sister, in what is basically a tax management strategy, and the sister doesn't necessarily do anything? That would be an okay adjustment to have. A less okay adjustment would be saying, which we saw in a real business, and I really like these people, and so this is not an insult to them, but we saw a business where there was a current key employee, and they basically said, this person we think is receiving above market compensation, and so we envision a future where this role is paid less and it's a different person. And that is like the idea that would be an adjustment that would then reduce, or that would increase EBITDA and thus increase the purchase price. That's an enormous risk factor. And so, and the fact that like the business was struggling, and so the fact that it is struggling with a key person being overpaid and potentially overqualified is concerning. So that would be not a legitimate adjustment in our view.
I saw one where two their business was not doing well in the last couple of years. Two key people had been kept on for 6 months in the previous year, and the adjusted EBITDA said, "Oh, we should have fired them earlier, so we're going to add back their salaries." I'm like, you don't get to do that. That does not make
mistake
sense.
Adjusted. Yeah, no, there's all kinds of like, oh, that was a one-off expense. That like we tried to build a piece of software and like didn't work at all. And it's like, do you plan on never making mistakes again? Like, are you going to indemnify me against ever making mistakes? Like, that's a legitimate aspect.
Yeah. I think this is the tricky bit about once there's a gray zone, people will cram everything into that gray zone they can. So as soon as you say, Grant, I believe adjusted EBITDA can make sense because of people's certain tax, tricks they're doing, and we should adjust for those. As soon as you say that, I now say, ooh, there's a door. I can slide my toe into there. Yeah. Reminds me, I also opened up that second office and it wasn't profitable. That was just a test. Like, it just shouldn't count against me. So I do think that the lessons I'll pull out there for business owners as well as buyers is be careful with any of these adjustments, or anyone who tells you that down the road you can always adjust that out. I've seen this again. This is a tricky gray area here, but like, for example, you as a small business owner say, "Oh, I want to start up a software branch of my business, a SaaS or something, based on what we've learned running this agency." Interesting idea. A lot of people try to do this, but think about it as far as a business expense, because it's going to cut out from your bottom line, and that will devalue your company if that business never works out. And so you either want to find a really good way to shelter that out and, make very good, strong case that it is completely separate and all that, or don't do it. Especially if you're going to go to market and sell in the next 5 years, like, don't do it.
Yeah. And you can do it as a separate entity, and you can fund it through distribution. So it's not an expense. This is me taking my profitability and redeploying it into something else. Like, that's, no one will bat an eye at that. And that's great.
I'll put a little asterisk.
Unless you're using it.
Yes, exactly.
If
That's what I was going to say.
The software.
Yes, because usually the next step is they go, "Oh, and I use that software to run my agency more efficiently." And then you go, "Okay, so now I don't know what's what," because it is. I understand what you're saying. You're totally right. There is a legitimate way to push this over into a little bucket and say that belongs over here. But in reality, these things get muddled very quickly because it's two small businesses that use a lot of the same resources. People get, hours in the wrong bucket, like categories and things. And so anyway, just something to think about for anybody out there doing side projects. Grant, I could talk to you for hours, but I won't. I will have a couple last questions. One is, you and I both struggle with relaxing. And I joke about this because a lot of times, when people ask me about, like, what's great about having a business that doesn't need you every day? Like, can't you just sit on a beach or play video games all day? I'm like, yeah, but the kind of people who build businesses that get to that point just don't sit on beaches or play video games. We just struggle with that. What do you see that as a problem, a bug, or a feature? Maybe is the way I'll put it. Or are you doing anything to, quote unquote, fix or change that about yourself? Or is that something you've accepted? How do you feel about that? Has that settled with you?
My favorite definition of an entrepreneur is a person willing to work 80 hours a week for themselves to avoid working 40 hours a week for someone else, which I tend to be that person. So yeah, I hate to see it. I have found that my wife and I both do a thing where we take a Sabbath where we do not work at all on Sunday.
That's good.
We try not to even talk about work or think about work to the extent possible. And that has been very effective. Do we work on Saturdays? For sure. but do we work on Sundays? No.
So you got your one day at least.
Yeah, we got the one day. Yeah. And that has been very good. I feel like I'm increasingly have come to terms with it. I do enjoy it. I find it fun. Like, the analogy I use is if, collecting Pokemon cards was also something you could do as your job. And I just love collecting Pokemon cards. And by that, I mean building businesses. So
right.
Here we are.
Yeah. I do think it's interesting because a lot of people, they'll caution, just broadly speaking, the advice is work-life balance is important. And yes, whatever that means to you that's true. But when work is also your hobby and something that you truly enjoy and love and get a ton of fulfillment out of, it doesn't feel like work anymore. And so it may energize you in certain ways. I almost think of it as different tasks are draining to me. And sometimes I do have to do these draining, difficult tasks. You don't get a free pass just because you own a small business and you hired other people. You still have to do some stuff that you don't want to do. So I try not to do a lot of those every day because they just make me feel like crap, and I don't want to get up the next day and do it again. But if I'm doing those fun type work tasks, those I don't really put into a bucket of you got to stick under this hour limit or whatever. Because why would I? It's it's just as productive as reading a book, I guess. It's just different. So yeah. I struggle with it, though. I think that's something I haven't come to quite accept about myself, is how to think of it. Anyway, what have you been reading lately? Any books that you recommend? I'm always, adding to my list and always love to get recommendations. Anything that's really stuck with you?
There's a series of books by a guy named Eli Goldratt.
Oh,
he wrote The Goal, and then has a lot of other
Yep.
books that are expanding on his theory of constraints concept.
Yep.
Most of which are fables, similar to The Goal, that I just love and reread
I
all
love
of them
Fables. Yeah.
recently. Yeah, they're
Yeah.
so good. Yeah, there's people that have done books inspired by that. There's a book called The Phoenix Project, and then a book called
Yep.
The Unicorn Project about like DevOps and then software
Yep.
development.
I
And
read both those when I was an engineer, and the goal
yeah,
was like the starting point. I love all those. Yeah, that's
yeah,
cool. Those
yeah.
are good. I'll have to
So
go back to those. It's been a few years, so that might be worth re-digesting. Last but not least, Grant, where can people find out more about you or follow up with you or look at what you're doing? I know you're real active on LinkedIn. We'll put that in the notes.
yeah, best place is probably LinkedIn. I mean, like nonprofitmegaphone.com, entrepreneurialcapital.com are those websites. Lexicate.com is Julia's. But yeah, LinkedIn is probably the most active place. Try and be fairly active there.
Cool. Well, thanks again, Grant. This has been a lot of fun. I always love catching up with you, and I appreciate you sharing all the things you've learned. And I'm sure we'll have to do this again in a couple of years because you're constantly on the move doing new things. So thanks again.
Yeah, thanks, Tom.
Thank you for watching this episode of Retain Trust. If you like this one, give it a thumbs up and subscribe on YouTube. It takes 2 seconds and it helps others find out about the show. And if you have questions or suggestions for a future episode, leave a comment. See you next time.